Well, it is great to be with you all. Thank you so much for that nice introduction, Steve, wherever he went. 1,000 years. That's impressive. No. I do not have anywhere near that much experience, but that's one of the reasons why I've been excited to get to take this year to spend time with different ministries, because I have some experience, but I've been teaching the last 7+ years, 7 years at Southern, 3 years at Wildwood before that, and felt like, I need to go make sure that the stuff that I'm teaching actually works, right? And to really understand what's going on in the field. So what ministries are going through, what's working, what's not working, what are the common challenges, what are the common success factors. So I have been learning a lot. I just started trekking around in June, and so I'm still new on the way. Came back from Honduras for the last month. I'm going to head to South America after this and some other places. So I am really grateful for the chance to get to do this. But I'm also grateful to get to talk about ministry finance. So this is actually kind of where my career started, was in accounting and finance. That's what I studied in university and what I worked in since high school. And then life went a different way. I actually left all of that behind for a while and did full-time Bible work, full-time ministry, but yet God somehow seemed to need both of those. We need to do ministry, but we also need to deal with finances in ministry. And so I am sure that all of you have some needs for finances. If you are running a ministry, there's always a lot to do and never quite enough money somehow. Actually, I only heard of one. This set a nice little record for me. A couple days ago, I was talking to someone who said their ministry had been given so much money that the ministry wouldn't even last long enough to use it all.
What? Oh, man. I wish.
Yeah, all of you were like, how did this happen? I know. That was the only time anyone's ever told me that. I was like, wow, good for you all. That's amazing. I'm not sure who gave it. I need some more details still. But for the rest of us, it's usually trying to figure out how to do so many things on a limited budget. And so we're going to talk about that today. How do we manage the money? How do we deal with this? How do we track it, budget it, report it, just make decisions about it, and all that good stuff about finances. But before we start, I know we pray, but why don't we just say one more word of prayer? Let's begin. Father in heaven, thank you so much for the chance to be here this afternoon, and thank you for the chance to talk about managing the finances that you give us, because it is your money. It's not our money, whether that is the money of our ministries or even our personal money. None of it is our money, Lord. You are the one who originates all of our gifts and resources, and help us to remember that and give us skill and wisdom now as we talk about how to use those resources wisely. And I pray this in Jesus' name. Amen. All right. So we're going to talk about 3 areas today. We're going to talk about financial strategy. We're going to talk about budgeting. We're going to talk about systems and reporting. And so these are just some key areas that I have noticed our needs or that questions come up. And we will put time at the end for questions, because I'm happy to talk about whatever areas you all want to talk about. I don't promise to have the answers to those. I'm not an expert in every aspect of finance, but we'll do our best. So we'll give some time there. But as mentioned, it often seems like we are trying to do more than we have money for. And I cannot promise you that by the end of this talk, you will now know how to just have that endless supply of money. I have not seen that will necessarily be the result, but we do need to figure out how to use what the Lord's given us. It's this principle of stewardship, right? And this is key in our personal life. It's also key in our ministries. And it reminds me of when Jesus told the parable of the talents. You remember the master comes, and they're all given in Matthew chapter 25 some money. Some 5, 1 2, 1 1. And 2 of the servants were commended. 1 of the servants was not commended. Why was he not commended? He didn't do anything. He put it in the ground, right? He didn't use what the master had given. So there is a principle here. We can sit around complaining that we don't have enough money in our ministries, or we can use what the master's given us. And all the servants who were used what they were given got more. In fact, they doubled. I love that. How'd you love to double the revenue in your ministry this year? Amen, right? Well, that's what happened in the parable, so we'll see, right? But they used it and they doubled it. Guy with 2 got 2 more. The guy with 5 got 5 more. And then in the end, he got 1 more than that because he got the one that the guy didn't use. He got the talent from the unfaithful servant as well. So when we use what God's given us, God is able to give us more. And I think this is a key principle. God does want to bless our ministries, but God can't maybe bless our ministries as much as he'd like to if we're not using well what we have. And this is a principle that donors look at as well. And I know this. They want to know what you did with their money. If you use their money well, if they trust how you're using their money, if they can see results from their money, they're a lot more likely to give you more money. If you can't show them what happened to their money, if it's not transparent, if people feel like the money was just wasted or the ministry is not sustainable, then it's less likely to get more money in the future. And so I think that this is a big key. Financial management is a big key for our ministries, because if we want to continue to gain support, then we need to be using what we have well. So how do we deal with financial strategy? Well, first of all, we need a financial strategy, because he who fails to plan is planning to fail. Yeah, I've seen this quote attributed to different people, from Winston Churchill to Benjamin Franklin and other people in between. I'm sure many people have said it over the years, but it does hold pretty true. If we're not making a financial plan, we cannot expect our finances to just work out. Though this might be the way that some of us like to do it. We're like, I just spend money and hope that there's enough in the bank. Yeah, not the best strategy. I mean, you can do that, but I'd recommend a little bit more planning for that. So the thing is, financial strategy really needs to be tied to your entire strategic planning process. It's not a separate process on its own, where, okay, this is where we make the plan for the money and this is where we make the plan for everything else. No, they have to go together because they influence each other. And whatever happens has to support your mission and vision. So the money should be used for the things that are your greatest goals, the things that are going to most advance your ministry forward with where you are trying to take it. So last year, I did a session on basically mission and strategy alignment at this event last year. And we talked about how everything should circle around your why. You know, everything should go around that. You need to know why you exist, what you're trying to accomplish. Then you figure out, all the hows and the details of that. But your financial strategy has to match this. If most of your money is going to things that are not furthering the why of your organization, then you have a problem. You're not putting your money where your priorities are. And I tell students this when I teach personal finance to university students. I talk to them about how life is all about choices. It's not that, we're trying to eliminate having any fun, but I have to make choices. And, I can choose to spend money to go to a concert now, or I can save that money towards needing to buy a car next year or needing to buy a computer. We have future goals, and what we do in the present affects whether we'll ever make it to those. And so we want to think about that in our process. How is our financial plan really backing up what we say we want to do and why we're doing it? We talked about how what you do should be your intersection of your passion and purpose, what the Lord has laid on the heart of your ministry that you need to do, the abilities and resources that you have, and the needs in the community. If you can mesh all those 3 things together, then you are going in a good direction potentially. That's a good sign you're on the right track. If you're doing things that you have a passion for and you have the resources, but there's no need, you're going to be irrelevant. If you're doing things that you have resources and there's a need, but it doesn't fit the calling, the passion that the Lord has given you as a ministry, then what's the point? And if you are doing things that you're really passionate about, there's a need for, but you don't have the abilities and resources, you're still going to be ineffective. And this is a key in financial planning. We do have to be, to a degree, realistic, right? We can have huge dreams, but do we actually have the ability, the resources, and the abilities to do that? And so we have to think about the finances as well. We'll talk a bit more how we balance the realism and the faith in just a minute. But we do want to think about that, make sure everything's going towards what is most important. And so if we think of our strategic planning process as a whole, we generally go from our vision and mission and our values, that's our why, our who we are. Then we go to our what, our goals and objectives, our strategies is our how, and then our implementation tactics are the when. The thing is that once we get down to the bottom part of this scale, when we're talking about strategies and implementation, those things often have price tags. All of our strategic planning is fun and wonderful until we get there, right? We think about all the goals we want to achieve and where we want to go and how it's going to be. And then all of a sudden we get down to realizing it's going to require resources. It's going to require time and energy and money. So by the time we get down to basically the bottom of our strategic plan, the operational plan, this is where we also need to be making our financial plan. So if you've done strategic planning with your organization, you've gone through this process, at the bottom you get to your operational plan, which often looks something like, like this. You start breaking down your objectives and putting tasks and putting people that are responsible and putting costs and putting dates. And some of these things don't cost money, but some of them do. And the ones that do need to go into your budget. So a mistake that I see is organizations do two processes. They do strategic planning and then they do budgeting separately. That doesn't work. They are really one and the same process, because once you're going through your strategic plan, this is what feeds into your budget. All of a sudden, you're going to start to see how much those items are going to cost and what you need to budget money for. Your strategic plan is what feeds the figures into your budget. Now, this might also be where you realize you need to be a little more realistic with your plan. So sometimes we get down to the bottom of our plan and realize, we might have to push some of these items out to next year or the year after, or kind of modify a little when we start realizing what that's going to do to the budget. And so it's really kind of an iterative process. The items on your operational plan inform your budgeting. But you also may need to revise the operational plan as you look at the financial requirements. And so they kind of happen in tandem. You work on your strategic planning, and this throws numbers that need to go in your budget. But then I look at my budget and I realize I might need to change my operational plan a little bit as well. So there's some back and forth until you get those two to mesh and you make sure that your money is going to the right strategic priorities. And at this point, this is usually what your financial officer of your ministry looks like. Your financial person loves the strategic planning because everyone comes up with all these great ideas, and all the finance person is thinking is, this is going to cost a lot of money. This is going to be really expensive, isn't it? So have mercy on your financial officers in your ministry. Do think of them. They are thinking of you in the realism. And so we have this delicate balance that we make, I believe, between like faith and presumption, essentially. Faith and presumption. So a couple of quotes on this. Here's one by Ellen White. But godliness with contentment is great gain. There is danger that ambition will lead to presumption. So we can be too ambitious and actually lead us into presumption. We get all our plans and we're like, we're going to do this and this and this and that. But we may be beyond what God has called us to do right now. It's got to be a prayerful process, right? To know, like, we are really doing things not out of our own ambition, not just trying to go where we think the ministry needs to go right now, but that we are following God's lead on this. So there's some caution about not going too far in our ambition. On the other side, there's always balancing statements, right? So I love this one. There has been great fear of running risks and moving out by faith and sowing beside all waters. Opportunities have been presented which have not been grasped and made the most of. There has been a great fear of venturing. True faith is not presumption, but it ventures much. So how do you balance that? How do you know in your financial planning when you are being bold to venture in faith and when you are being overly ambitious and getting into presumption? It's a good question. Semi-rhetorical, but we'll make it not rhetorical for now. Anyone have thoughts on that? How do you know when you're going in faith versus presumption?
Go slow.
You go slow. Okay? How slow?
Well, let's say you have multiple projects. You can try one project at a time.
Okay, one project at a time. That might be a good idea, right? I don't know if this is working, but thank you.
I think steady.
Steady? All right, so I heard a steady. We've got a hand to your right there. Go ahead.
Weigh the risks versus the benefit. And so, you don't want to, if the risk is too high compared to the benefit, then it's not a good idea.
Okay.
But at the same time, if there's a great benefit, but the risk is too high and you don't make your mark in fundraising or whatever, then, you might lose more than you can afford to lose. So you're constantly having to readjust your cost versus benefit and, what the possibilities are for backup. If you've got somebody that might back you up if you make a big mistake.
Do you have a little insurance there, some donors that will step in? But that's a good point about risk and reward. The greater the risk, the greater the possibility of a reward, but also the greater the possibility of loss. And so I need to know that that risk is worth it. Which risk would be worth it? Hopefully this is a risk that is very core to our mission. Should be something very aligned to what is most important to us. But yeah.
There's things that have great risk but have low reward.
Sometimes, yeah, great risk, low reward, just avoid those. Yes, sir.
I've found that if it's something that is directly forwarding God's work and He's put you in a position to help with it, it's never been a presumption.
Greatly forwarding. And so sometimes we need to look at the openings of providence, right? God may put us in certain situations, certain openings where we see God's providential workings and we say, okay, there's a risk here, but we see that God's been moving.
Yeah.
So it seems God's opening doors and we should take advantage of that. Okay, I think Steve in the back had his hand and then we come around.
Yeah, one of the principles I found to be that God has put for us in the scripture is that He says, open your mouth wide and I will fill it. And so I think we open our mouth wide and see what God does, but don't keep our hands closed to what God may want to do, but allow ourselves to be open and let Him fill that. Like the widow, she came to save her son from being sold into slavery, and she said, what do you have? I just have some oil. And I said, well, go home and get some jars and fill them. And so she decided how much blessing she was going to get by how many jars she borrowed. So there's several examples like that in the scriptures that I think give us some guidance. But again, it's a matter of a lot of prayer to make sure that it is not presumption, but that it is truly, I think that what Dwayne said is key. It's advancing God's work.
A lot of prayer, but opening the mouth wide. So we have to make room for God to be able to work and to bless. Okay, I've got a hand here and over there, and then we'll see if we can come back around. Then we'll move to the next topic, but please.
I can see you trying to do that. All right, so in my contribution to this, the challenge I think we're having as we process me, myself included, is that that question in particular, even though we're in a financial presentation, is not so financial. When it comes to the matter of faith, it is a journey with God.
True.
And but God Himself, while Jesus Christ, as His example here, operated by faith, He operated in my remembrance, according to James 2, verse 18. One will say, show me your faith by your works, and another will say, I'll show you my works by my faith. So how for me would I try to figure the balance or the difference between presumption and faith? Is that my faith precedes my works, but my works speak to the faith. So if I'm faithfully going forward, then I'm strategically headed in a direction to accomplish what I have faith in.
This makes sense, right? Because if I say, I'm going to step out in faith here and take this risk, I better back it up by doing all the things that I can do that it would take to make this work. I need to put in the effort towards this end, believing, preparing, and so on and so forth. So very good thoughts, very good thoughts. All right, fine. All right, one more. And then actually you had your hand up first. Well, I'm sorry. We'll come around to you right after. Go ahead.
I think a lot of it too depends on the tendencies of the person that is having to make the decision.
That's a thought.
Because, obviously in the Bible, you have messages to, about faith to those that would tend to rely on their works and vice versa. So, there's might be a tendency for a certain personality to just go ahead. Or maybe they're very ministry minded, but not very business minded. So that person may need to consider more things on the business side of things, but you also have those who are more business minded and less ministry minded. And that person needs to consider more the ministry aspect.
That's true. There's balance there. And some of us are more naturally risk averse or naturally risk takers. And so we have to balance our own personal dispositions with where God is leading and filter that. Okay, last one, Ms. Kotbeck. Please.
I think, trying to come to a clarity on answering the question, how good am I at seeing how God has led in the past?
Ooh.
Which way has God been leading? Where has God been in not only my personal journey, but also the ministry journey that we're each in? And of course, the famous verse, ask and it'll be given to you, seek and you will find, knock and the door will be open to you, Matthew 7:7. The learning process of knocking and trying to listen for God's Spirit in it. Is this door being opened or is this not of God?
Yeah. Thank you. That's a good point to kind of move forward with, is that this is a spiritual decision. So these are not just money decisions, though I would venture it's never just a money decision. Money decisions are spiritual decisions just as much. And so we're really thinking about this. We're prayerful about it. We are wanting to be able to move forward with God's leading and in God's time. So we'll move on from there. I'm sorry, did you?
Well, I just want to say, looking for counselors.
Look, yes, thank you. That is also a good thing, is to get some counsel on it. Have someone else look at it who has experience in ministry, who says, this looks like a decent door. I think this is going to be a black hole for you guys. This is not going to be good for you. So getting counsel, honestly, the same type of way that we would make any decisions is useful in making these financial decisions, is going to God in prayer, looking at the counsel in Scripture, getting wise counselors, looking at how God's led in the past, looking at the leadings of providence, reading our inspired counsel. All of these need to come into these decisions. And then, in general, we want to make goals that are smart. Once we've been through this, and we've prayed about it, and we've researched, and we've gotten counsel, and we've done all that we can do, we do the best that we can to make realistic goals and projections. Ones that are specific, that are actually measurable. We can see whether we did it or not. But I put this up here because achievable. So it is better to do something that is achievable than if you set a goal that's too way out there, it's hard for anyone to really get behind and work towards it because it just seems impossible. It's like telling someone who is severely obese that they're going to lose 200 pounds in a month. not very motivating because you know it can't really happen. Wouldn't be good if it happened anyways. Yeah, that'd be a problem. Yeah, need a lot of surgery, a lot of major stuff. And so, yes, there are times though God does really big, amazing things. I'm not saying that is out of the realm of possibilities. It is. And God may be opening those doors and you can see that and it is achievable. But try to do things that are achievable so that your team can know what steps they need to take. Because this should translate into action. They're not just out there in a number on a spreadsheet somewhere, but it has to actually translate into relevant time-bound action in what we are going to do every month, every week, every day to reach those goals, those financial goals. And so that's going to be important. And so this kind of leads us into the budgeting process. So we talked about how it really overlaps with your strategic planning. Financial and strategic planning are part of the same process. But when we think about budgeting, I love this. I did the math. We can't afford the cat. Sorry. Actually, I love cats, but just thought that was cute. So we want to think about what we are going to do in our budgeting. So there are some basic things that we can think about when we do our budgeting. First of all, we have to forecast revenue. It is generally better to estimate your revenue in your budget more conservatively. If you have extra revenue, great. You can do more projects, you can go bigger, faster, whatever you want to do. But if you budget too aggressively and you don't make the budget, then you're in the awkward position of what gets cut. What do we do? You know, what if we've already spent some of the money and now it's not looking so good? And so it's generally better to estimate a little conservatively. You want to look at past history. So if my past history is only, generating $500,000 in revenue, it's probably not going to be $4 million next year unless I have specific reasons that it will be. Specific campaigns that I'm doing, fundraising I'm doing, new operations I'm starting. Like if I'm going too far away from past history, I need to have some justification for that. And so some of that, maybe if you're doing a major capital campaign. Now, what do I mean by capital campaign? This is when you are raising money for a major project, like building a new building or starting a new arm of your ministry or buying a new property, something like that that's going to cost a decent amount of money. Those are capital campaigns. Those also you want to think about carefully when you budget for them. Typically, even this isn't fully a fundraising seminar, but if you're trying to raise money, typically organizations don't even start appealing to the general public for a capital campaign until they know that they have major donors who've committed to over half of that campaign, sometimes 60, 70%. Because they know that if I can't get my major donors to commit to at least a large chunk of it, it's very unlikely I'm going to get the rest of it. And so there are some things you can gauge before you know we're going to go ahead and anticipate that we're going to raise $4 million next year. If I'm going to anticipate that, I should have talked to my major donors and had an idea that I've at least got some pledges and I at least have some traction that may be realistic. So try to have some of that before you start even budgeting for those things for capital campaigns. And capital campaigns really can have their own kind of sub-budgets. Maybe I am trying to build a new building and I need $4 million. And then if I don't get it, well, that capital campaign may need to take another year or two, or it might take more time, but I will keep that separate from my operating budget. So I have special needs that I'm doing major fundraising maybe for that I want to track separately and not confuse that with my regular operating budget. We're going to talk a bit about restricted funds in a minute. So revenue can be one of the tricky things to estimate in a ministry, especially if you do have a lot of donor money that comes in, because that can go up and down. But you want to do your best to estimate as accurately as you can. And then, as mentioned, some of your revenue is going to be what's called restricted funds if you are a nonprofit. Now, what do I mean by restricted funds? I mean funds that are restricted by the donor, not by you. I don't mean funds that you as a ministry decided, okay, this much is going to go for education this year, or this much is going to go to buy a new car. You can internally restrict and unrestrict whatever you want. But when I talk about actual restricted funds, what I mean is funds that are restricted by a donor, meaning the donor donated it for a purpose. They said, this is for the new truck. This is for the new building. This is for the new piano. If they have done this, you have to track those funds, and you have to keep them separate. You can't just use them for other things. So there are regulations, legal restrictions on that, permanent restrictions on that. Can you change that ever? Well, not on your side. If a donor gives you express permission to change a restriction, then you can. And I would document that and have everything documented so there's no questions about that. But you can call a donor and say, hey, we know that you gave this money for a new truck, but we really need this more. Can we use it? And if they say yes, fine. But we need to respect their wishes of what they gave money for. You may also want to consider this when you even accept money, because you don't have to accept all donations. If someone says, we want to give you this much money to build a greenhouse, and you're like, we don't need a greenhouse. Sometimes it's better to talk to the donor, ask them to give to something else rather than take money for something you don't need, or it's going to just sit there for a long time restricted. Nonprofits often ask for unrestricted funds when they solicit donations, and that's honestly the best thing. Like, you can do an appeal and say, hey, we're raising money for this new building, but then in your donor letters and communication, it discloses that these are going to be unrestricted funds. If they are not used for this building, then the ministry has a right to use them for other things. So you can have those disclaimers so that you're not locked in to having to legally restrict those funds. And so that might be something to be careful of when you're doing your appeals for donations. It's a lot easier if your donor solicitations make clear that those funds could be changed to be used other ways if necessary. We do this a lot, like with students going on mission trips. Let's say that people are giving towards a mission trip and XYZ student Johnny can't go anymore. He gets sick, doesn't go. Do we have to refund back all the people who donated? Well, usually we have a clause in there. If this student can't go, that money will go to another student or another trip or something else. And so it's going to make life easier for you if you can keep your donations largely unrestricted. But if they are restricted, you need to keep them restricted. You need to show them as restricted and have them accounted for separately that way. Expenses. So when we're budgeting for expenses, obviously you're looking at past expenses, first of all, thinking about what's realistic based on the past. But you also want to think about what you want to track and how you want to categorize your expenses in your budget. And so you may think about if you want to track certain categories or certain departments, anything that you want to be able to track how it's doing, it's wise if you set your budget up in that same system. In essence, what I'm saying is that your accounting chart and your budget uses the same categories. That's going to be a lot easier. So think about what you really need to track. You can also think about your tax filings. There are certain things you have to itemize and report on your tax filings. And if you're tracking those things separately, then it's a lot easier when it comes time to do your tax filings. You don't want too many accounts. Your budget becomes really cumbersome if you try to budget for every tiny line item. It's like, and this is our budget for cleaning gloves. And this is our budget for cleaning wipes. And this is our budget for cleaning mops. And if you break everything down too much, your budget is just too complicated and it's not practical. You do not need that level of detail in your budgeting. On the other side, you might need some more level of budgeting than what you're doing. There are some organizations that really don't break it down. They're just like, operating expenses. Here you are. Just throw them all in the big pot. That'd be the other extreme. So you want enough detail that you really can monitor what you're spending in major categories, but not so many that it's just cumbersome. No one cares. No one uses it. And so think about this when you set up what's called your chart of accounts. And so this is where budgeting meets your record keeping and bookkeeping. When you're setting up your chart of accounts, ideally your chart of accounts matches, again, the same things you want to track in your budget for expenses. And so a typical nonprofit chart of accounts will include accounts for assets and liabilities. So maybe you have a checking account, a savings account, some investments, accounts receivable, that's money people owe you, grants, pledges, cash. And then maybe you have liabilities, accounts payable, that's money you owe to others, or accrued salaries, salaries people have earned, you just haven't paid it yet, benefits, taxes, so you might have liabilities. And then, of course, your income and expense accounts, breaking down your income, individual corporate contributions, corporate contributions, grants, event income. If you're doing services or you're selling products, try to track those separately. And then the expenses, whether that's payroll or office supplies, rent, utilities, taxes, any major areas that you have, you can create accounts for. And if you have set up an account system that is not really working well for your ministry anymore, what should you do? Change it. So there's an interesting balance here. If your chart of accounts is just not really fitting what you need to track and what you're budgeting for, then you may need to change it. However, I would advise not changing your chart of accounts frequently. Why? It makes it hard to budget and compare from year to year. Because if this year I tracked it this way and that year I tracked it that way, it doesn't match as well when you're doing year-to-year budget comparisons. So as much as possible, try to leave at least the major categories of your chart of accounts the same. If you need to change it, then do an overhaul that you have to do once, ideally. Take time, really go through where your ministry's at, what accounts you need, what you don't need, how you want to track it. It's better to do it once and get it in the right place so you can be consistent from year to year than to be modifying it every year because it's not what you want. And so either keep what you have or get it right and then leave it alone, ideally. And so that's going to be the easiest thing to do. Don't create a million accounts. You can have sub-accounts that may change some, but try to keep your major structure the same if you can. You may want to also do your budgeting by departments or different classifications. So if you're a ministry that has different activities, like here's one that has community and memberships, one that has education, one that has events. Or if I was doing budgeting for here in Wildwood, there's different departments. There's the lifestyle center, there's the school, there's the natural food store, there's the farm. And it's good to be able to track these because these are essentially sub-businesses under the main ministry. And so you may want to break down your budgeting by department as well. And that can be very helpful to keep your leaders accountable. Again, your goal is to have something realistic that people will actually follow. I have been in organizations that did not have any budget. I'm like, how do we decide how to spend money? If you need to spend money, you basically go to the president or the financial treasurer and you say, hey, can I spend money? And they'll either say yes or they'll say no, but you never really knew how much money you had to spend. You just showed up and said, can I spend money? And someone would say yes or no. This, is possible, but it's a lot easier for those who are working with your ministry if they have the budget already too. And then they know. And I know if I am doing education, and that's my area, that I have this much to spend on this, and this much on this, and this much on that. And then I also don't have to go to my president every time I need to spend something. Give your people leeway to spend without permission within parameters. So if they're within the budget, and if it's below maybe a certain dollar amount threshold, then make it so they can just spend it without bothering you if you're the ministry leader. That's going to make life easier for you. It's going to make life easier for them. And it adds a layer of responsibility because I know this is what I have and this is what I can spend. I've got to be wise with it. And so it's important for your workers, especially your managers, to have that budget with them as well. All right, financial statements. So you should be able to have some major financial statements. A statement of activities is one. Now this is the name in nonprofit. In for-profit accounting, we know this as the income statement. Same thing, different name. So you should have an income statement or statement of activities. That's your revenue or your income minus your expenses. You should have a statement of financial position. That's your balance sheet. That's your assets minus liabilities, what you own minus what you owe to see where you're at in total. And then some nonprofits also do what's called a statement of functional expense. This is not like a required statement, but it can be helpful to donors because it basically breaks down expenses by categories, what are program costs, administrative costs, fundraising costs, because donors often want to know how much of their money is going to a project, how much is going to the overhead, how much is going to what. I just had someone telling a group this morning to not give money to a certain organization for hurricane relief. You know, we just had Hurricane Helene and there was a lot of damage. And someone was just posting, don't give to, I won't say the name, this organization. The money will never get to where it's supposed to go. They just use it for all these other things. Only give over here. Organizations, ministries can get a bad reputation if people think that the money isn't going where it's supposed to go. And so the statement of functional expenses essentially helps to break down so everyone can see, hey, this is where the money went and what categories it was used for. And they can see, all right, my money's not going to just administrative costs. It's not going to program costs. It's going straight to the needs. And then there's a statement of cash flows. And not all ministries focus on this as much, but it is actually pretty useful because you can have a positive net income, yet have no cash. Let's say you are a school and you have lots of income on the books because you're charging tuition, but maybe you're not collecting the tuition. I worked in a place like that once. We had a great financial statement on the books, but we had no cash because it was all sitting in receivables because no one was paying. And so it's important to also look at where your cash position is as well so that you stay solvent in cash. So how many months of operating cash is it good to keep on hand in your ministry? All right. No, those are good answers. So it's in personal budgeting, but it really goes to ministries as well. It's helpful to have at least 3 to 6 months of operating reserves, which means if I got no income in, if my ministry had to close for pandemic number 2 for 3 or 6 months, I would have enough reserves to pay for those months. Now, it's nice if you can have a year or more, but at minimum, you should at least have a few months. Sometimes we run without that, but then the problem happens. If anything goes wrong, we can't pay people this month. We're running into problems. As at all possible, budget to get some reserves. It will help your ministry immensely to not be near as stressed if you know you have at least a few months of leeway saved up for your operating expenses. So now let's talk systems and reporting. So in order to have financial statements, we have to be recording our income and expenses somehow. How many of you in your ministries do your own bookkeeping in-house? Let's see some hands. Okay. All right. And are there others of you who hire it out? Do you hire a company to do it? 1, 2. Okay. So most of you do this yourself. All right. I'm sorry. I know it's not the most fun thing always to do, but it is an important thing. So let's talk about accounting systems here. You do have to decide, am I going to outsource it or not? And I will say it depends on your resources. Most ministries at least do a lot of it themselves just to save the money. But sometimes you can be a small ministry and it's actually better to just hire a bookkeeper or someone rather than trying to do it on your staff. So that's a decision you have to make. But I would say that whether you outsource or not, you still need a financial officer that oversees it. You cannot just outsource all of your accounting and bookkeeping and assume it will be fine. Someone's got to monitor that person. Someone's still got to know what's happening. And many ministries do a combination, and maybe you do most of the day-to-day bookkeeping in-house yourselves, but then you outsource things like maybe hiring a payroll service to process payroll and those taxes and all of that. Or a tax accounting service to at least file your tax returns and work on those types of things, or an auditing firm. We'll talk about whether you need to be audited in a minute. And so it can be worth your while to outsource some parts of your accounting, at least to have professionals to look over it. So for instance, even though I have an accounting background, ministries that I've worked with in a financial capacity or treasury capacity, I still prefer for us to hire a public accountant or someone for our tax returns, because it gives a check and balance on it. Now it's not just me feeding all the information and doing it. Someone else is looking over it and approving it. It takes liability off of me, and it's always good to have multiple sets of eyes on something. So we all make mistakes and so forth. And so it is good to have some resources in your accounting, tax accounting, in those areas. For your day-to-day bookkeeping, though, there are different systems that you can use. Are any of you in situations right now where you're trying to figure out what system to use for bookkeeping? All right, good. All of you have something. So hopefully it's working for you. If you need something in the future, I've had some ministries asking me recently, what should I use? What options are out there? There are different things. I mean, yes, you can just do it yourself on a whole bunch of spreadsheets and just track it down the manual way. But ideally, you'll probably move onto some type of accounting software that can do more of the features and the reporting and without such manual work. So some of these, a very common one is QuickBooks. Staple for small business, you do have to pay for that, as you do most of these. Also watch, when you look at the advertisements for most of these, the price they'll quote you is usually like an intro for 30 days or 6 months, and then it goes to the price above it, which is the regular price. So, they get you in with the discount. But they have different plans and has a lot of features and different things it does. Used QuickBooks in a number of places, and it's been very easy overall and a very reputable source. If you are wanting something that is more specialized to nonprofit, Blackbaud now also offers nonprofit accounting. And if any of you have heard of Blackbaud has been on the radar for a good while as far as like fundraising and donor management. They have a very well-developed system for managing donors and fundraising and whatnot. So if you do your accounting with them as well, all that can integrate, which is really nice. However, this will not be your cheapest option. This is more pricey. When they don't put the pricing on the website, it's usually more pricey. And knowing what they charge for their fundraising software, it will be a little pricey. So that is something, but for a larger organization, or if you really want to integrate with your donor management, Blackbaud could be a decent option for you. If you are on the opposite end of the spectrum and you're like, we've got to have this free or next to free, Wave is probably the cheapest I know of. Wave apps. It has some of the functionality of a QuickBooks type of program, but it's more basic. Does not have all the functionality, but it does work. And you can get the free plan literally for free, or you can upgrade to get some more features. So if you've got nothing else and you're trying to start with something, they do have options that work. I will say, it's better to invest in a system you want to keep than have to switch systems. It's a pain to switch systems. Even though most systems will export and import, so they make it somewhat easier to switch systems, it's easier if you don't have to. So think about what you need, not right now in your ministry, but in the future. It's better to set up with a system you want to keep. There's a few other options. FreshBooks is kind of a QuickBooks alternative that some people like, a little cheaper, but has a lot of the functionality. Then there is Zoho Books. That's another one that's gained traction. Zoho also has kind of a customer relations management platform that if you use their platform, then Zoho accounting works well. I would say that's probably when I would recommend Zoho, is if you're using the rest of their CRM as well. Otherwise, I don't know if it's okay. So they have some. And then there's all sorts of other options. Sage, Xero, Aplos, Striven, there are more. So you can research if you are thinking of switching or looking for systems. Typical things I would say to look for in your system: invoicing, expense tracking, reporting. Those are all major needs, usually tax preparation. Some of you might need inventory management if you're selling things with inventory in it. Payroll. So if you're doing payroll, you can do payroll separately. There are services that just do payroll. It doesn't have to be in your accounting software, but it could be. Look for customer service. Some of them have better customer service packages than others. And then integration and ease of use. So will it talk to other systems that you're using? Can you use it easily? Especially if you're a ministry and you may be relying on bookkeeping help that has no previous training in accounting. Sometimes you have people that have the training, sometimes they don't. And so think about that when you're selecting a system, because you want a system that could be used by someone, maybe not with a ton of training, depending what you're working with. So you do want to look at the ease of use there. Now, in addition to bookkeeping, you do need to think about what reporting is going to have to come out of this. And so I'm gearing this towards US-based nonprofits, as that's the majority here in North America. Canada will have some slightly different things, or if you're here from another country, you'll have to check their requirements. But remember that you have not only federal requirements, but also state or province requirements potentially. And so you want to check on what reports are due, not just federally, but to your state or province. So it could be sales tax reports, state taxes, those types of things. And if you were a 501c3 nonprofit, how many of you work with 501c3 nonprofits? Okay, so if you are in that realm, then do remember that's a federal designation. That's on the national level. This doesn't automatically mean that you get sales tax exemption in all states. This does not mean that your purchases, you have to obtain certificates for that, you have to do different things. So just realize, just because you have federal tax exempt status doesn't mean you qualify as exempt in every state and so forth. You do have a process there as well. But if you are a 501c3 nonprofit, then you will need to remember you have to do a 990 tax return every year, 5 months after the end of your fiscal year. So May 15, if you're a December 31 fiscal year end. Generally, You have to do this unless you're exempt or unless you're under like $50,000 in gross receipts. But above that, then you're generally required to file the 990. And 990s are public documents. Do you know that? Everyone gets to see your 990. So I looked this up. So we're here at Wildwood. I know I feel bad putting this up here, but it's public. So there's Wildwood. You know, you can see how much money they made last year, how much income is on there. You can start to see the financials and what happened. I just put this in Google here. Look at that. The ProPublica, that's up there. OCI. So OCI meetings, there you go. If you thought your information was private, you can pull the whole 990 tax return of OCI. If you wonder what OCI is doing with the fees you paid to come to these meetings, you can look it up. So this is public information, even things like donors. If you have donors that have given over $5,000, you have to list them and their addresses on your 990. So it would be wise, even if you're hiring someone to file your 990, it would be wise to look through a 990 because you're going to start getting an idea of what you should be tracking because there's information you will have to report on a 990 form. Now, some organizations and nonprofit even have to be audited. So this depends on your annual funding and your state requirements. You could be required to have an audit. There's a difference between an independent audit and an IRS audit. The IRS, or Internal Revenue Service, they can audit you if they want to verify things on your return, but you may also be required to have an independent audit. Even if you're not required, it's not a bad thing to have an independent audit. So OCI has independent auditors, and we have auditors go through our financials every year. And there's benefits to that, even if you're not legally required, because, well, some funding, like grants from certain foundations, only go to nonprofits that are audited. They want to know that your financial statements have been verified by an outside entity. It can add transparency so that people trust your financial statements more. It can add accountability because people know these are going to get audited. That reduces the incentive for, God forbid, potential fraud or other issues going on when they're audited. And they can also show improvements in your systems. So a good auditor is going to actually tell you, hey, this is what you can do better to improve your financial systems. Audits can also be a pain, and they can be expensive. So this is a decision you'll have to make. So most of you probably may not be required by law to have an audit, but depending on your revenue level and your state, you may be. You can check that. But even if you're not, you could consider it and decide whether that's worthwhile for your organization or not. Whether you get an audit or not, though, internal control is really important in your financial management. So what do I mean by internal control? Well, developing written policies and procedures. So this is how we this is kind of like we said earlier, how much money does someone get to just spend and how much money do they have to ask permission before they can spend it? You know, what is our process for reimbursement? What are our policies for, pay and wages and just different types of things that affect the finances? Having written policies really makes a difference. It protects you, it protects your workers. And so if it's not written down, you have problems sometimes. My word, their word, who said what, there can be messy lawsuits that happen. And so you want to have written policies and procedures. It can save you, even legally. You want to have separate duties. A separation of duties provides a check and a balance on it. So generally, there may be someone that is actually doing the bookkeeping, processing expenses, and someone else who is approving them, who is signing the checks. At a minimum, you should not be signing reimbursements to yourself. Someone else should always be, if you're receiving the money, someone else should be signing off on it. It just prevents any questions from being asked and any allegations from coming up. When you make sure that, if the money is coming to me personally, that someone else in the organization is the one signing off on it, not me. And so it protects me and it protects the organization. And so separate duties, ideally, so that you always have someone that is checking on what someone else is doing. That really helps, even if there's never any fraud. You know, we may not be that worried. We may trust our people wonderfully, but there can still be mistakes. Everyone makes mistakes. And so those checks and balances help in those situations too. You can have physical and access control, so being careful of where documents are stored, how they are stored, who has how many times I had to semi-threaten my students that if they left the office door open, I was going to take away their access. Because we had expensive equipment in there and anyone can walk by and take stuff if you don't leave it secure. So those things are important. Having a review process so that there is someone to actually review your financial statements, including doing regular reconciliations between what's on your books and what's in the bank. So you're making sure that you're putting those two together, that you're keeping your documentation either in your accounting system or in places where you can access your documentation. This is for your own needs, but this is also if you get audited by the IRS or someone in the future, you will need your documentation. And then educating your board. Guys, I will tell you this is a challenge because a lot of members of our boards are not necessarily financial people. And that's fine. They don't have to be. Some of you might not consider yourself financial people, but you should train your board how to read the financial statements and ask intelligent questions. Because I have seen too many boards that just approve whatever gets sent. They're like, oh, good. As long as it doesn't look like we're losing tons of money, no one asks any questions, just keeps going. And there could be major things. I remember being on a board before and comparing financial statements from one year to the next. Net assets had decreased like $4 million. And no one said anything. No one noticed. It's like, something's not right. Like, where'd the 4 million go? And it was not a fraud situation. I mean, it was just a reporting and system thing. Like, we figured it out. But someone needs to know that. You shouldn't be able to send things to your board and no one asks where the money went. And so that takes some training, though, of your board, of your management, so that they actually know how to review the financial statements and ask questions. Otherwise, it's not doing a lot of that check and balance isn't doing a lot of good if you have people that don't even understand your statements to be able to ask questions about them. So that could be taking some time, maybe taking some time yourself. If you're a ministry leader and your accountants, bookkeepers are producing statements you don't understand, make sure they explain them. And so you need to understand it as well. And voluntary reporting is not maybe filing our tax returns or doing those types of things, but this is where we should be circulating financial statements regularly, like our statement of activities, the income statement, or our statement of financial position, which is the balance sheet, our budget versus actual. I'd recommend these be circulated to your board and or executive committee, depending how you're structured, ideally monthly, at least quarterly. Because if you're only circulating financial statements annually, it doesn't give much room to make adjustments in the meantime. If we wait till the end of the year and then we realize, oh, what happened? That's too late. You want to know early on, are we behind budget? Are we over budget? How are we doing? Where are we at every month or at least every quarter so you can make adjustments so that we know where we're at. We can scale back, we can scale forward. We don't wait till the end. My homeowner's insurance just did this to me though, but it's kind of my fault. I should have watched more closely, but they have what's called escrow where you can have an account that pays out your homeowner's insurance and your taxes. Well, they didn't notify me, and my insurance didn't notify me. They raised my premiums like $700 and just didn't even know until I get down to the end of the year and my mortgage company's like, oh, your payment's going up because you're $1,200 behind on your escrow. I'm like, I would have liked to have known that last year when the rate went up. But anyways, this is the problem when you don't watch things in the interim. So watch them not just at the end of the year, watch them as they go so you can address problems while they're happening. And you can make decisions while they're happening, not when it's too late and it's already done. Consider financial updates regularly, even to donors, showing where the money went. So this is where, financial management meets fundraising. Because the more transparency you have, the more trust you're going to generate. And the more trust you generate, the more donations you can generate. Donors will donate where they trust. When they trust that your organization uses their money well and they can see what's happening with it, they're more likely to give again. I know donors specifically that they have the money, but they don't give a lot at first. They will give a small amount. They will see what you do, and then they will decide if they're going to keep giving or give more. They're testing you. And so you want to know, and they want to know what's happening with their money. And so one thing you may also want to consider, you don't have to, report to your donors every month, but for instance, an annual report. How many of your ministries issue an annual report to supporters? Maybe 1, 2, okay. So an annual report is something that is a good practice. It's both for promotion, but it's also for transparency. You can share your statistics, your impact, what people's gifts have done. So it generally shares the finances, but also what's been happening with those finances. So for instance, here's one I pulled online, and they are just kind of showing where the money went, how much money went to different places, what they did with it. I was pretty impressed when I got an email from an OCI member ministry that had all of this. And it wasn't even the end of the year. They're like, hey, thank you so much for your donations. Here's how we spent them all. Here's what they did. Here's our pie chart. I'm like, thank you. This is very nice. Maybe I'll give you more money. And so this does help. This is one I just received from Southern Adventist University, where I used to work. And so they will break down their annual report with a whole bunch of statistics. Look at that. They're like, here's your philanthropy at work. And so they show all the different categories, where people gave, what these gifts did. And then they put it who gave it. Alumni gave, other people gave, students gave, friends, parents. And then they put all their little awards down there. It's a great time to tell all the wonderful things about you, all the things that are happening, where the money went. Oh, here's a student. There's me and my students. We went to Uganda. They put our nice story in the annual report and then put a bunch of statistics about missions. How many students got sent on mission trips or long-term missions or whatnot through the donations. So people want to see, hey, if I gave to missions, what did you do? And so they're publishing what we did with that money. Even my students in the university, we have a social entrepreneurship program called Enactus that I was overseeing that does projects in the community. And we had to do an annual report. They're required to, and they have to disclose this is how much money we made, this is where it went, this is how many people we impacted, this is what we did. So even my students had to do this. And so it's part of being transparent, and it's also part of just gaining donor trust. Your annual report is actually a means of getting more support and more donations in the future for your ministry. Now, why should we do this? Back to our biblical principles. 1 Corinthians 4:2 says, moreover, it is required in stewards that one be found faithful. God wants us to be faithful with our finances, right? So that we are using what God's given us wisely. And then back to the parable of the talents, Jesus talking to the faithful servants. The Lord said unto him, well done, good and faithful servant. Thou hast been faithful over a few things. I will make you ruler over many things. Enter into the joy of the Lord. Do you want that? Do you want God to say of your ministry, you have been faithful with a few things, I'm going to give you more things? I tell you, the two things I hear from ministries as I travel are we need money and we need people. I don't know if anyone relates to that. But what are we doing with what we have? Are we being faithful with the resources God has given us? As we are faithful with the resources God has given us, stewarding them wisely, planning for them wisely, accounting for them wisely, sharing about them wisely, then God is able to give us more. And I believe he will give us more as we use what we have well. So, I want to take questions. We saved the last 15 minutes here for questions. You can ask questions about whatever, accounting, reporting, funding, financial decisions. In the back, sharing it. Oh. Okay, so the question was what type of program? You mean like design program for an annual report? Different things. You know, when we've done, some of them will use some Adobe products like InDesign. That's common. I tell you now, though, my students, to be honest, they use Canva. There's a free one. You can set things up in Canva if you don't have the whole Adobe suite or want to go into some of the fancy programs. Honestly, Canva still amazes me. You can do a lot there. So yeah, anything that you're comfortable editing in that you can make something that looks nice and attractive for people. Yeah, so in something like Canva, you can't just input numbers in there. It's just a design program. It does have certain pieces that it can create, but you would need to run the numbers ahead and have some charts and graphs, and then you can pull them in. Yeah, so you can use Excel, you can use other things to create maybe some of the charts. Canva does some, but it's not going to do like calculations for you. You've kind of got to have that all done and laid out, and then you can lay it out. It's a good question. Yes, Lois. Hold on, a microphone is coming. We have one. Thank you.
Something that I have not understood. Perhaps you have some thoughts on sustainability. You mentioned it in the first part of your talk. Yeah. But it's just a mystery to me.
Sustainability. I'm assuming financial sustainability, yes, right? Yes. Okay. So sustainability. So there's a lot of movement in the ministry world to wanting ministries to be more self-sustaining, self-supporting. And so that is generating your own income, right? Now, this is easier in some situations than others. For instance, I know you all in India run orphanages. Orphans can't pay. They're not going to pay tuition in an orphanage, right? So where does a lot of the funding come from, usually for orphans?
It comes from interested donors.
It comes from donors, right? And so there are some things you can do to become more self-sustaining, and that is like starting industries. So if you have various industries or projects that you can have people work on that could generate money, for instance, a lot of schools barely break even, if that, but a lot of lifestyle centers do turn profit, or they do book sales or farming and selling things or producing some type of product. So if there's an industry that you can do that's complementary to your main ministry, that's not detracting, it actually complements, then those can be ways to become more self-supporting, kind of the Madison College model, right? Where they had these little businesses that students were running and supporting more things. But also being sustainable is thinking about your fundraising. And so even if you are donor funded, it's having a good system for that. And so how am I thanking donors? How am I keeping them giving consistently? How am I communicating with them and asking them and getting to the place where you have a good system so that your donors are more consistent can also help with that. But there is more of a push, even from donors, to want ministries to be producing more of the money themselves. And that's just part of the reality, and something that we work with is thinking, okay, what can we do to generate income of our own so we're not only donor funded if possible? But it's not always easy. And certain types of ministries will probably always need to be at least somewhat donor funded, depending on the nature of your work. So, could be. Okay, William.
Michelle, how do you find somebody to do an internal audit, and what would you look for?
Yeah, good question. So for an internal audit, I mean, typically most most ministries will hire a CPA, a certified public accountant. And so there are certified public accountants that do that. Some are individuals, some are firms. There are some that work specifically with nonprofits. But generally, if you want like a credible audit that people will recognize, you need to have a public accountant who's certified to do audits. Yeah. So, and they're out there. There's Adventists that do this and others. So, yeah, good question. Good question. Other questions? Money, money, money. And it's like, where do we get the money? What are challenges that you guys run into in your financial management? That usually gets people talking. What are probably the biggest things that you run into problem-wise? Organizing. All right, why is organizing difficult? A lot going on.
You're busy doing your own operations, so to take the time and put that on the system, that's just a lot of time, and
it's true.
You could be using it somewhere else.
It is true. I had a ministry contact me yesterday. If any of you wants to go visit them for 2 weeks to help them organize their months of stuff they're behind on in their bookkeeping, they are looking for you. And so it is easy to get behind, and then you've just got to catch up, because then you've got stuff sitting and they're like, we're international. We've got stuff in shoe boxes and stuff here and stuff there, and it becomes a mess. And so, yeah, that is a big challenge. Obviously, the more you keep up with it, the less it's overwhelming later. That's probably a big thing. But another thing is making a system easier if you can. And so the more that you can get a system that is more automated and less manual, the better. So that's a nice thing. If it can directly link with your bank so it pulls in transactions so that you can reconcile it more easily, that helps. There are some systems where you can take pictures of receipts and just send those over to your accounting system. That can help for people who don't want to do a bunch of entry. At least you've captured the data. And so, yeah, organizing is a challenge. But I would say try to make it as easy for yourself as you can. The easier it is, the more likely we are to do it. If it's complicated and hard, then we tend to procrastinate it, and then it gets really behind, and then we really procrastinate it. And so, yeah, definite challenge. Other challenges. What do you all run into in financial management in your ministry? Startup. What? Startup. So you mean getting money for startup? Yeah. So getting started is a whole thing. That's a whole seminar, and starting up the ministries, right? And so raising money for startup capital can be challenging because you don't have that track record yet to pull out your annual report and be like, oh, we did all this stuff last year, give us money. Instead, you're having to sell the vision, the dream of what God has laid on your heart. So it is more difficult, obviously, to raise startup capital for that purpose. I would say big things in raising startup capital are going to be having a really solid business plan. So being able to have a solid business plan that you can show people, this is what we plan to do, this is how we want to use the money, this is how we're going to make the money back. And so having a solid plan. Number two, when you're dealing with startup finances, honestly, people buy into you personally as much as they buy into your vision. This is the reality of it. There's no track record of the ministry yet. So they're buying your vision, but they're buying you. They're saying, I think that this person's actually can do it. I trust them, they're credible, and that's going to be a big deal. So making those connections and that network can take a while, but investing in those relationships and people who believe in your credibility, that's a big part of startup fundraising too. Also partnering, when you can partner with other ministries that can help you in your startup phase. If there's a ministry who would kind of mentor you or help you launch, that can be an option. And sometimes you've just got to start small too. You won't have everything up front. I see a lot of ministries and they're like, well, this is the blueprint. So we need to have all these things. And it generally is a lifestyle center and a school and a farm and some other things that go with it. And you're laughing because you all know this. And so, and they're all on this plan and there's all these buildings and staff houses and all this other stuff. And yes, someone may just fund you to do all of that. But more likely, you're going to need to start with one of those things. And you're going to have to start smaller and you're going to have to build this in phases and increments and work on that money gradually. And then as you show that this is working, then you get money for the next part and you have to build in pieces. It's good to have a whole master plan, but you can't probably expect money for the whole thing up front necessarily. Maybe you will, but often we'd start with a small bit. Yeah.
As you mentioned that, what are the advantages, especially as it concerns startup, to doing so virtually as opposed to
Okay, so advantages of doing a startup virtually instead of in person. Now, the advantage of virtually, obviously, is that your overhead is way lower. I mean, if you're not having to build or rent buildings and have all this infrastructure, it makes it so much easier. And so if there's a way for you to have your minimum viable product, your MVP, be virtual, that really helps. So if you're wanting to start a little lifestyle center, I have friends that just started it by doing, online health coaching or doing some stuff out of their home or, getting some customers. Or we had a client I was working with my students. He was trying to start a restaurant. He said, why don't you start out with catering? Get your recipes down, get out there, get some clients. And then once you have clients, actually open a physical location. Now, not everything can be done virtually. Some things require a physical location. If you have a swimming pool ministry, you might need a swimming pool. I don't know how you do virtual swimming, but a lot of things, if you can start virtually or out of a church, out of a home, something where you don't have to invest a lot in bricks and mortar in the beginning, it's a great way. You build a following. That's the ideal way to start, is you have a following, you have customers before you ever open physical doors. That's the ideal. Yeah, good thought. Yes, William.
So talking about the startup,
Mm-hmm.
do you know of any examples where, let's say, somebody had the money
Yeah.
and wanted to do the startup, but because there's not a track record, maybe they said, well, I'll give you the money if I can be on the board.
Ah, yes.
Or, is that even a good idea? Or
Ah, yes. Okay, this is a good point to bring up. Money often comes with strings. Strings attached. And there are definite donors who, if they give money, want to be involved. And that's not bad necessarily, but it depends. Again, I would go to Amos, isn't it? Amos 3:3 that says, can two walk together except they be agreed? And so this is a very good question. Often organizations put people on their board specifically because those people have money and they want them to give money. And it is not bad to have people on your board that have money. But remember, especially if you are a nonprofit, your board owns the ministry. They hire and fire you and everyone else. So if your board has a majority that wants to go a different direction, that is where the ministry goes. And it could be something different than you've planned. And so I don't think it's necessarily bad to have someone that is willing to give money and sit on your board. It may be a big blessing. You may need them in your leadership. That may be a very good sign because they're saying, I don't just want to give you money, I want to help you. And if they really want to help you and you share the same mission and the same vision and the same values, and you can work together, that's great. If this is money coming from someone that is going to maybe taking things another direction, you may need to consider carefully whether you want to take the money or not, because it can change your ministry in the long run in some big ways. So it's a good point. Did I see a hand? No. Yeah, okay. All right, we got 3 minutes. Is there a last question? Anyone? One over there, Naomi.
You've mentioned, and I've heard it before as well, about having policies. Do you have a website or a recommendation of somebody who's already has a template that we could just jump off of?
Oh, that's a really good question. So like a template for financial policies.
Yes, because it's a good recommendation, and I've thought about it for years, but it would be just nice instead of creating it from scratch to already have something of an idea. Or do you know of a ministry that has a good set of financial policies?
I mean, I'm thinking in my head, I do know sets of financial policies that I've seen in different ministries and so forth. Some have different strengths and weaknesses. I can't say that I put together like a sample set. That's a good idea. Now, OCI does have a startup guide that has some guidance for certain policies and some parts of it, but not, I guess, as much specifically like financial policies. But thank you for that recommendation. We could probably put that together. That's not a bad idea, and that's doable. And offer it through OCI. There we go. I love it. I think we could work on that. Yeah, thank you. All right. Well, thank you all so much. It's been great being with you. Why don't we have a word of prayer? We'll close up, and then if any of you have any specific questions that you didn't want to speak publicly, because this is about money, then feel free to come by later and we can talk. So let's pray. Father in heaven, thank you so much for the chance that we've had to be here this afternoon. Thank you that you are the one who owns the cattle on 1,000 hills, and you can supply all the funds that are needed for our ministries. So I just pray for each one here in the ministries that they are representing, or even the ones that they want to start in the future, that you would just lead and guide, Lord. We know the funds are there, but help us to be wise with what we have. Give us wisdom as we think about how to go forward. And I do pray for your provision for each of the ministries here represented, Lord. You know the needs, you know the challenges. And I know when we come to a place like this, there are many needs and challenges in people's hearts. We come here and we say all the wonderful reports, but there's also many needs. And so I just want to pray your special blessing on each ministry here, Lord. Guide them. Lead them forward, provide what they need, expand their ministry, show them where you are working so that we can just work with you there by faith, Lord. That's all we're looking for. This is not for our glory or our ambition. It's just simply to be working where you're working and in step with you. So I just pray for that, Lord. I thank you that all your biddings are enablings, that when you call us, you provide for those needs as well. And I thank you and ask this in Jesus' name. Amen.